positive session on Wall Street. So let's discuss this change in narrative with our next guest. Jason Paltrowitz, Executive Vice President at OTC Markets, is joining us this morning. Jason, good to have you on the show. I'll start by getting a reaction from you in terms of this development that we might be looking at the end of the government shutdown. How positive do you think that could be for equity markets today?
I think all news is good news. I think the market needs to see that we're moving past this. I think investors want some surety, both for the economy and for their own investment. And so any progress on this issue, I think, is going to be positive to the markets, not just in the U.S., but broadly speaking across the world.
What sectors do you think could gain the most then if we actually see the government shutdown panning out?
Well, that's an interesting question, because I think as I've been looking at the markets for the last couple of months, certainly for most of the year, I think what we're seeing at OTC Markets is certainly investors being a little cautious on AI and thinking maybe we're hitting bubble type environment. And so we've seen a significant amount of equities moving out of some of those sectors and moving in primarily into Europe, which makes up one of the biggest markets for us. And we're seeing investors moving into European defense sectors, oil and gas, mining and resource. And so we'll see. We'll see where AI fits as we come out of this and whether or not that sentiment continues moving forward.
It's interesting that you mentioned how investors have been looking at Europe as an alternative option here. But when we look at the performance for the benchmark in Europe, the STOXX 600 versus the S&P or even versus the NASDAQ, that narrative has eased so far this year. So where do you see investors actually investing in Europe at this stage in comparison with how they're positioning stateside?
Well, I think if you look at the S&P 500, yeah, it's up, but it's really the top 10 stocks that are now making up 40% of the S&P. And so I think investors are still looking at those stocks, and maybe there's still some upside. But when you look at the 490 behind it, I think they're reallocating some of that interest into Europe. And so we've certainly seen a growth of dollar volume into the stocks that we have on our market in Europe, up 56%. Much of that is in pharmaceutical, in oil and gas, in defense, but we are seeing it across the board. You know, we are the largest stock market in the U.S. for non-U.S. equities, acting as a secondary market. So we're uniquely positioned to see U.S. retail, smaller institutions doing that rebalancing and trading into Europe and Asia across our platforms. And so that's what we've seen historically, and I think that's what we're going to see moving forward, even as we talk about the government shutdown coming to an end.
Do you see any similarities between European defense stocks and U.S. tech stocks?
Not particularly, no. I think, you know, when the world is looking at the geopolitics of what's happening, I think there is a view that Europe is going to have to take on much more of their defense. And so this is something that's early stage investment from Europe and the wider DAC region, as well as the rest of Europe. I think U.S. tech stocks have been on a bit of a run, and U.S. investors are looking at that in more of a bubble environment right now than we have historically. And so there are a lot, when you look at U.S. tech, there's a lot of similarities to the late 90s, early 2000s, whereas I think European defense is looking kind of the early stages of what could be a shift in the global political landscape.
Interesting. So what do you make of the concerns that we witnessed last week in terms of AI valuations? Are we perhaps at a point where those are going to dissipate, or do you think this is a narrative that is likely to creep up again?
I think this is a narrative that's going to be here for a while. I think if you look at the investment announcements that come out, they're all investing in each other, and that causes a big pop. You know, ultimately, AI has to prove itself either on the expense side or the revenue side. I don't know that a case has yet been made on the revenue side. So if you're looking at the AI's impact on the expense side, that has downstream ramifications. I think you're looking at, you know, people worried about unemployment and where does that come from? And so I think investors are starting to take a look at that and question whether or not those valuations and what is going to happen again, either on the revenue or the expense side, are real, and when will they become real?
So would you say that this is a moment to actually get out of big tech exposure?
I think it's a moment to be cautious and really be thinking about it. If you look back on some of the great bubbles, right, you don't want to be riding necessarily the bandwagon. I think people need to be thoughtful and certainly look at other options for their money to diversify and protect on the downside.
Let me bring the conversation back here to the UK, because this is also a very important month. We're going to hear the Chancellor presenting her new budget. What is the outlook for UK equities in this context?
Well, I think UK still has a way to go. It's not that long ago that the UK was trading at a 40% discount to the US. And so as I look at US investors, they're still looking at the UK with upside. I think you've got some currency issues with the dollar that help that. But certainly as you look at European equities versus their US peers and the discount that they've been trading at, there is an opportunity there. And certainly we've seen it as the percentage in investment or the dollar volume in UK equities during the first 3 months or 3 quarters of the year has been up close to 60%. So investors are seeing that, they're going into it, and they're looking for some value.
Interesting. Jason, great to get your insight. Thank you for joining us this morning. Jason Paltrowitz, Executive Vice President at OTC Markets. Let's look at one key European